heard Sarah say, best month since November of 23. NASDAQ's pacing for its best month since November of 23 as well. Did get PCE in line with expectations. The president accusing China of violating the trade agreement. The summer setup for stocks. That's really what I want to focus on today. And Steph, you get the first crack. The summer setup for stocks looks what?
I think we could be sideways for a little while because we just rallied 18% from the April lows. But I think it'll be short-lived, and a lot of it is because the economy continues to chug along. Just before the show, the Atlanta Fed tracker came out at 3.8%. That is a huge number. I'm not saying that we're actually growing that, but that has everything to do with better income numbers, better spending numbers, and a little bit lower inflation data today. But also the weekly jobless claims and the labor market in general remains very strong. So the economy is chugging along. That has led to better than expected earnings at 12%. I think you're going to do 8 to 9% in total for the full year. And then there's $7 trillion of cash on the sidelines. And while retail were buyers from the April lows, institutions were not. And so I do think you're going to see a catch up because I think you're going to see a lot of people, I bet a lot of people are behind their benchmarks year to date.
Josh Brown, fill in the blank. The summer setup looks what?
I would lean on the technicals. And as bad as everything looked at the lows, obviously the biggest comeback has been in the stocks that have gotten us here over the last, I don't know, 8 or 9 years now. The Mag 7 names, I think, is the most interesting place to start. Understand that at the very bottom of the market, an equal weight index of the Mag 7 was negative 30%. If you take that same equal weighting of the Mag 7, the most important stocks to the index, they're now 8% below all-time highs. So they're not quite all the way back, but close enough for horseshoes and hand grenades, as they say. And then if you look at the overall market and you think about the internals, it's all over the place. The top 3 sectors with the most constituents currently at 4-week lows, it's exactly what you would think. It's materials and energy, literally the worst names. And when you look at where the strength is, it's exactly where you would want it if the narrative is what Stephanie just said. The economy keeps chugging along. 87% of technology stocks in the S&P are above their 50-day. That's the best sector. Industrials is right behind it. 86% of those names are above their 50-day. And then financials, 81%. So if I didn't have that data and you said, Josh, which sectors do you want to see with the most stocks in an uptrend, those are the 3 I would give you, and that's exactly what we have. Last thing, within the overall S&P 500, 68% of constituents, more than 2/3, are above their 50-day moving average, and about half are above the 200-day. So we're back at the old highs, stalling out a little bit. Goldilocks inflation number this morning. Unemployment is okay. It's not, it's not great, but it's not bad. And it kind of makes sense that the market's taking a little bit of a breather here and allowing some of these trade headlines to cool us off. Big picture, though, I think Stephanie's exactly right. This is a pretty good setup for, let's hope, a less eventful summer than the way the spring has gone.
I'm going to remind everybody that we are waiting for Jamie Dimon and Morgan Brennan out in California. Looks like they're getting a little bit closer to that. And as soon as we see those two on the stage, we're going to go there and take some of those remarks live. I will send it to Jim Lebenthal for his view. We are feeling better. We've obviously rallied a lot. Best month since November of 23 for stocks. We've, if not become fully desensitized to trade headlines, we seem to be reacting to them better. Chris Harvey, Wells Fargo today, he says the tariff bark, worse than bite, constructive second half for stocks. That's his outlook. Jim, your thoughts on that, and I may have to grab it from you back
understood.
Here if we see the events unfolding in California.
Understood. Stephanie and Josh just listed some positives. I'm going to come at it from a different angle, the opposite, which is that the tariff bark hasn't shown up. Remember all the bad things that just 8 weeks ago we were talking about, how the shelves were going to be bare in stores, how layoffs were going to happen? This just simply hasn't come to pass. So when we talk about desensitized to trade news, it's because we understand understand that there is a potential path forward, a likely path forward, in which trade deals are realized. Those egregious tariffs that were announced on April 2nd come in quite a bit, and that they're offset by the tax bill.
Okay, I'm going to take it from you here because the conversation is beginning at the Reagan Library. We'll go there.
Privileged to be sitting down with you, Jamie. There's a lot to get to in this conversation. So I figured we'd start small, and then I would ask you a really basic, straightforward question, and that is, what's your biggest worry right now?
Yeah. So first of all, thrilled to be here. I'm glad you're doing this. I hope we may join the defense forum you guys do every year too. And the way I look at it, the big picture is the tectonic plates are shifting. We got to get our heads wrapped around that. Those tectonic plates are the geopolitics with these terrible wars, terrible proxy terrorist activity around the world, North Korea, the potential proliferation of nuclear weapons over time, which is the greatest threat to mankind. And then you have the other tectonic shift is the global economy. So the global military umbrella of America, and then the global economy, of which trade is a part. You know, the other parts are do people want to partner with you? Do you have your alliances? Do you have investment agreements? And all those various things, and they're changing. And then our debt, which you just heard a bunch of folks talk about eloquently, it's large, and it's not just us. We added $10 trillion in 5 years. We have, you had Reagan up there talking about deficits. The debt to GDP was 35%, and the deficit was 3.5%. Today, it's 100% debt to GDP net, and a deficit of almost 7%, highest peacetime ever. And when the CBO does their numbers, which I don't really trust, by the way, they should do the stress test. Like, what happens if we go into a recession? That 7% will be 10%. And so we have problems, and we got to deal with them. And then the biggest one, underlying both that, is the enemy within. I'm not as worried about China. China is a potential adversary. They're doing a lot of things well. They have a lot of problems. What I really worry about is us. Can we get our own act together, our own values, our own capability, our own management? What you heard today on stage was the amount of mismanagement is extraordinary. By state, by city, for pensions, and that stuff is going to kill us. And, I always get asked this question, are we going to be the reserve currency? And no. If we are not the preeminent military and the preeminent economy in 40 years, we will not be the reserve currency. That's a fact. Just read history. Now, I think we will be. Warren Buffett here would tell you we're enormously resilient. I agree with that. I think this time is different. This time we have to get our act together, and we have to do it very quickly.
That was...
With about as sharp and pointed commentary as I dare to say we've ever heard from him, nor anybody, frankly, in the position in which he currently sits. Taking on a number of topics today. The trade war, quote, we did too much everywhere, everything all at once. He said he was in China. They're not scared, he said, when asked how he thought all of this would play out. He also went after what he sees on the domestic front as well. Quote, we're not a team anymore. We need to fix immigration and healthcare, schools, taxation, regulation, among other things. That this time is, in fact, different. That his biggest worry, in fact, is us. He said, can we get our act together? Also said it was not a foregone conclusion that the dollar would remain the reserve currency of the world. Doesn't think it won't, but said it's not a foregone conclusion that it will if we don't get our act together, as he suggested. He also was asked, are the bond vigilantes back? To which he said, yeah, you're going to see a crack in the bond market. I don't know if it's 6 months, 6 years, but you're going to see one. He commented on the Fed as well. They're not really in charge, he said. They were late raising rates. They're right to be patient, and they're right to wait now. Also commented on private credit, too, which he has in the past gone after. That's the backdrop of Jamie Dimon. Maybe as animated on all of these topics as we've heard him in a while, always entertaining, clearly. But I don't know, guys, that he's been this provocative on this many topics. He may throw out there's a hurricane coming here or there's a storm brewing there, but one after another on all of these important topics, he put it out there. So
the markets, as we all were acknowledging, sold off during the speech.
And I'm glad you said that, because the markets are at the lows of the session or thereabout. Because this was a reality check in many sorts, Jim, and I'm glad you said that.
Yeah, well,
a reality check on kind of where he thinks we are whether it's domestically or globally, and what the implications could be across a whole swath of markets.
So the bond comments were pretty darn provocative. And if you want a reason for the markets in general to sell off, that's a good one. The comments about stockpiling bullets instead of crypto, well, leave out the crypto part of it, but stockpiling bullets, there was an apocalyptic tone there. And I'm sorry to use that word, but that's the word. Now, I don't think that's what he's predicting. He is definitely being provocative. I don't feel we're on the cusp of any falling apart of the government or society, but there were some pretty apocalyptic comments there, and I'm not surprised the markets sold off. I think the markets will regain their footing because, as you pointed out, Scott, he wasn't saying, hey, the crack in the bond market is going to happen Monday. Could be 6 months from now, could be 6 years. Right now, the bond market's pretty sanguine. The 10 years at 440 last I checked. That's not a distressing level. But he is putting it out there that we got to get our act together. Governmentally, societally, we got to come together.
The tectonic plates, Steph, are shifting, is what he said. And then he went down that list, as I described to all of you, on each topic and what he currently feels is taking place.
Yeah, I mean, he has had a negative tone for a very long time, Scott, but you're right. He was very detailed in a lot of different topics, which was surprising, actually. The dollar comments about being the reserve currency, I mean, that's not an overnight problem. The debt issue, that's not new news. The private credit and private markets versus publics was, I think, very, very interesting because we know that we've seen a massive shift into private markets versus publics, and we don't know what the implications are going to be, especially if he's right in terms of the bond market. So yeah, it's always worthwhile listening to him. I don't think I will do anything in my portfolio, especially in the near term, because of the comments that he said. But obviously, you have to respect the knowledge and the details that he has.
Kev, the other thing he said is what I see is inflationary. He added everything up and came out with the sum of inflation for a variety of reasons in which he documented there on the stage.
Well, I expected an impressive commentary, and that was a little bit more thought-provoking than I had even planned on. I took a slew of notes, and I noticed some of the inflationary numbers that you pointed out. And I think it really is relevant when you look at the eyeball test for inflation. I think we did a study in-house that was really only gasoline, milk, and beer that were at about a 3% return. So inflation is real. It's not going away anytime soon. The comments on the Fed and them not being in control was pretty compelling for me. All in all, a little bit more emotional than anything else. You know, we sit here on the floor, I've done it for a long time, and to watch the markets move, there's not many people that can do that.
You know, Josh, in the context of some of the commentary from the street today, which I wanted to bring up anyway, as we had our discussion about kind of where we are and where we're going from here, there are a number of firms out today asking whether investors are too complacent, whether stocks have come back so far that we're ignoring a lot of the risks in which Jamie Dimon just brought front and center for investors.
Yeah, so I don't actually think we're ignoring the risk. I think the risks are taking place and they're actually coming to fruition, and the related stocks are having these blow-ups, but they just pale in comparison in terms of their importance to the markets to the companies that are weathering this okay. So let me give you a for instance. Yesterday, Best Buy came out and they said the tariffs are causing pricing issues which are affecting consumer demand. The stock got hit hard. Best Buy is selling everything from vacuums and toaster ovens to flat screen TVs, cell phones, and computers. The market's not ignoring it. Look at the stock chart. Today, another example, Gap stores. This is schmatas, okay? They're selling $39 sweatshirts. If it's Old Navy, it's $19. Blown up. It's down 20%. How could we look at that and say the market's ignoring it?
Josh, the stock was up 55% from the April lows.
Right, it doesn't matter. It's an example.
The turnaround is for real. It matters. Expectations were very high. Well, I care because I own it, and I think it's wrong with what you're saying.
Okay.
I do. I'm sorry. I do. The results are actually quite good. Well, you're.
That's fine.
I think there's a big difference between Best Buy and Gap. That I'll tell you.
Okay. Look at the share price today. That's what we're talking about. I don't care about the stock. The point is, how could you look at these one-day events in these individual companies and say the market's not paying attention to the risks. I think we're pricing in the risks really in a really healthy, in some cases, really aggressive way. The way they did it with Target, the way they've done it with lots of other stocks I can sit here and reel off. So we are doing that. But Judge, the bigger picture is that add up the market cap of Best Buy and Gap and Ross Stores, and nobody cares, because what's going really well is the AI revolution. All of those CapEx numbers were just reaffirmed, and that's where the market cap is. I opened up the A block talking about the Mag 7. That's what matters more. So you asked me, like, why is the S&P within 4 or 5% of its old high from February if we have all these risks? That's the reason, and I've talked about this before. We have businesses like Netflix, which got two upgrades today. It's a utility. You know how bad things have to get for people to abandon their streaming service, for people to cancel Netflix? Do you know how good Sirens is? No one's canceling it. You're seeing analysts upgrade names like that and Spotify and some of the names that just have a more subscription-heavy component to what they do versus I need someone to go to the mall and buy an item. And so that's why the market is looking through this. It's not because we're not paying attention to the risk. It's because the more important companies by market cap, they simply aren't as affected by the price of bananas going up 50 cents a pound.
There also is the fear, you know, as we and he being Mr. Diamond, talked about what's happening in China and that how he was just there and, quote, they're not scared. There is concern now in the market, too, about escalation once again. And that could be weighing on the market, too, not just the commentary from Jamie Dimon. Markets for you one more time and show you an intraday of the NASDAQ. It's a real pain point, down 1 2/3%, as you see. Names like NVIDIA's down 4% right now. We mentioned the comments that Jamie Dimon had been making, but maybe more substantially to the market move was a Bloomberg report that said the U.S. plans wider China tech sanctions with subsidiary crackdown. So we started to see the market move lower. Obviously, a decline in some of the mega cap stocks is going to weigh on the S&P as well. And then even some of the issues that are in the Dow Jones Industrial Average. So we're going to watch all of that for you here, but we're pretty much lows of the day, maybe a touch off of that. But the S&P there is down 1% too. We also want to tell you about a story that's new at noon and a milestone worth mentioning today. Daniel Loeb's Third Point turning 30 this week. Hard to run anything for 3 decades, no less a hedge fund through the dot-com crash, the global financial crisis, and COVID. Loeb starting Third Point with $3.2 million cobbled together from friends and family. Today, it has over $20 billion under management and a net return of 15.5% since inception. Known for being one of the best activist investors ever, he's now grown the firm to include a significant credit and venture business. Loeb called the run, quote, improbable when he addressed the company's investor day yesterday, noting that only 2% of his cohort are still in the game. I spoke with him on stage and asked about his views on the markets for the remainder of the year. He told me, quote, I think it will be okay. I think we'll start looking towards a better, more predictable 2026. I think there will definitely be winners and losers. The economy will grow at about a 1% rate unless something comes out of left field. So I think it's a good environment for investing in growthy companies at good valuations. And speaking of that, Third Point, as you might know, has some positions smaller in Amazon, Microsoft, NVIDIA. Taiwan Semi happens to be a top 10 position, so there are bets on AI. And I also asked Mr. Loeb how AI is shaping the way they analyze companies at Third Point. He told me, quote, it's a pervasive component of our research process. It's a variable in which we benchmark all of the companies that we invest in, both in terms of how they're using it and how they're directly benefiting from it. You'll either be a beneficiary of AI or AI roadkill, so I think we all need to do our best to not be the latter. He also addressed several positions that the firm has taken, some recently. Said Third Point got back into U.S. Steel a month or so ago in the 30s. Well, there it is at 53.50. He was betting on its path to a deal and that it would materialize. This week's news of that company's partnership with Nippon sending shares surging. He has a new position in Kenvue, the J&J spin. Talked publicly about it for the very first time and said he sees a big opportunity there. And also said they recently bought bank debt, an X, the former Twitter, a liquid and tradable security. So congrats to Mr. Loeb. 30 years and still going strong. Final trades are next. We can do final trades, or you can tell me what you're going to be most watching now, Josh Brown, as you head into your final trade.
Yeah, I think I actually want to change mine. I want to talk about JP Morgan. This is like the greatest CEO ever in banking, and arguably one of the best. And I think what we listened to today was just so helpful for people to understand the risks that exist out there. I'm long the stock, staying long forever.
No one, anybody else here on JPM? Yeah, you guys do. You obviously like Wells the best of the group.
I own a ton of financials. A ton, but he was not as negative 2 weeks ago. Jamie Dimon was not that negative at their analyst day 2 weeks ago when he actually said business was better, incrementally better from when they reported the first quarter. He also talked up net interest income, certainly talked about risks, but he was more positive than I expected.
These were more sort of bigger picture risks, right? Not today or tomorrow. He doesn't think,
of course,
but something to chew on. For certain.
He said he would only run for public office if he could win.
Yeah, I'm glad you mentioned that too. And he said he doesn't think he could.
I think he could.
And that was the appropriate place to end it. Yeah, I don't know. Maybe we'll never find out. What's your final trade?
My final trade is Meta. Over 1 billion users being exposed to AI now. Incredibly profitable, tons of free cash flow.
Farmer Jim.
AbbVie,
the
great
former
drug
Jim,
company.
now known as Farmer Jim.
AbbVie.
Thank you. Steph?
The gap.
All right. I'll see you on the closing bell.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It's Friday, May 30th. It's after the close. And we just saw Josh Brown and a few guests on the halftime report. They shared some of their stock picks, and we're going to cover some of those stocks that they talked about on the show. We're also going to take a look at the indices here. We'll look at the heat map to see how the stocks, individual stocks performed. We're going to look at, actually, you know what, the groups, which is the sectors real quick, and some interesting news about Elon Musk and his drug use. Lots of articles here. And by the way, if you haven't subscribed or following me on X, you might want to access this candle pattern reference sheet. I also post a lot of things, like you can see here, some of these heat maps throughout the day sometimes, and articles that you might be interested in reading about. And you can also, under the highlights section, you can actually find the patterns reference sheet right there. Okay. Let's see what else we want to talk about today. One more thing. If you haven't become a member yet, guys, click the join button. It's right next to the subscribe button. Scroll down right here. These are the videos you'll be able to access. I do one every weekend where I go over my entire portfolio and I share my stock trades with legend level memberships. Okay, so basically you want to click on join. It will pop up this little screen. Under Blue Cloud Legend, you'll see the daily trade updates. I have some day trading videos there, the exclusive member only videos. You can also see the exclusive member only videos under Blue Cloud Trader, but you won't get the daily trade updates under this level here. And if you just want to support the channel, please consider that as well, so we can keep making these videos for you. All right, and what else do I want to talk about? I guess once you become a member, now you'll find those posts, the daily posts, right next to the posts here. It will show up, you'll see a new tab pop up as membership, and it will look like this, right there. So you click there, that's where you'll find those posts, okay? And like I said, I'll be coming out with a new one tomorrow, so look out for that. And they're usually about 45 minutes to an hour long. And I go, like I said, I also give about 20 stock ideas for the upcoming week. I go over in detail all the trades that I placed throughout the week, like the ones I traded today, for example. All right, let's see, folks. Let's see. Let's take a look at the markets. And what you'll notice is the Dow was up. It was the only one up. It was only up 0.13%. The NASDAQ down 0.32%. S&P 500 was down 0.01%, and the Russell 2000 down 0.51%. Here's the heat map. You can see NVIDIA was actually down 2.92%, and so was Tesla. A lot of the semiconductors were down a little bit. Utilities did really well, and so did the basic materials and healthcare and consumer defensives were green here. Overall, the market wasn't terrible, but it was kind of flat. It wasn't. You're not seeing big moves, really. And then what about the sectors? Consumer defensives, utility, and communication services were the top ones today. For the week, it was real estate, consumer defensive, and utilities, and healthcare. All right. let's take a look. And so the stocks that we're going to cover in this video are the final trades that they talked about on the show. We're also going to cover the Mag 7 stocks, okay? And we'll look at the indices, ETFs as well, and a couple of member requests and some sector stocks, ETFs. All right, let's start off with the Dow Jones first. On the weekly chart, you can see it's stuck inside the Ichimoku cloud here. Okay, so it has not broken through, but it's also built a nice little bullish harami pattern. Okay, so what you're seeing right here is these two candles, and what that represents is a potential move up next week. Now, if we look here on the candle pattern reference sheet, the one I just talked about that you can find on my Twitter page, if you look under double candle patterns, this is what it looks like in bullish harami. Harami in Japanese stands for pregnant. So you get the larger body and smaller body following it. That's bullish. And that's what we have right there. Okay, so that's why I think that there's potential here next week for the Dow. On the daily chart, you can see it's still holding up 4 days in a row above the Tenkan-sen, but it's still squeezed in by that 200-day, that yellow dotted line that you see right there. And real quick, folks, the green line is the 9 period, the faster one, and this is the 26 period for the Ichimoku indicator. You get the Ichimoku cloud that projects 26 periods into the future. We want to see the Senku span A, the light colored blue line above the purple. That's going to be bullish. And one final thing is the Chiku span, which is the closing price projected 26 periods ago. If that white line is above the candle 26 periods ago, it's bullish. So that's how you can tell if, you know, you've got a nice strong uptrend. So we do on the daily time frame, but you want to look for consistency and confluence in both time frames. And on the weekly chart, like I said, not everything is perfect here. You've got a bearish cloud. The faster moving average is under. Chiku span is underpriced still. So not everything is how you'd expect it to be. But, you can see that for the last, right now, on the monthly chart, for example, we created this hammer, which is a very bullish candle. And it looks like there's some potential here to at least move back up to these prior highs, maybe another 6% to reach those highs. And then we'll see what happens from there, right? FEZ, that's the Euro stocks. Look at this one. This is a beauty on the monthly chart. That's what you want to see. The momentum is there. The volume has been increasing on the weekly chart. We're starting to slow down a little bit here these last couple of weeks, but, overall, here's the daily. You can see it's kind of stalling a little bit. Overall, the Euro stocks are doing quite well, the 50 ETF. That's the FEZ is the ticker symbol for those of you interested in trading that or buying it in your 401ks or IRAs. Here's the Russell 2000. Here's the weekly chart. It's stalling under the Ichimoku cloud. It's not looking that great. I don't like this, okay? And on the daily chart too. It's on the daily. It looks more bullish, but that weekly looks terrible, right? So as long as it stays under the 26 period and the cloud, I wouldn't be touching this one, even though that looks good in the daily. Now, you might find stocks within the Russell that are very strong, and that's a different story, okay? But the ETF itself, I wouldn't be just blindly buying this here. I don't think it's ready yet. Let's look at the QQQ ETF. See the difference, right? So the QQQ ETF is showing strength. I'm sorry, I was there. Sorry about that. Showing some strength right there. It is also stalling for the last 3 weeks, though. It's kind of stuck in this little consolidation stage. So 3 weeks in a row, it hasn't really moved much if you think about it. So that's why I'm saying sometimes price needs a little breather, and then you can see it popping. If we see it break through and close above next week, above that level, I think they're going to see potential here. If it breaks under the low of that candle, expect it to drop maybe down to this level here, potentially down to these levels, the bottom of the cloud, and maybe it will find some support, or maybe it will break through. We'll see. Here's the S&P 500. SPY looks very similar. Not a lot of difference there on the weekly. And here's the daily chart. Also it looks pretty good on the daily. It's just kind of stalling, like I said. The VIX dropped 3.18%. That's good for the markets. We want to see the VIX dropping under the cloud, under the moving averages. That's good. All right, and then these are the stocks that they talked about. AbbVie. Now, AbbVie was Farmer Jim's final trade. And so let me get rid of that line there. It's inside the cloud. So one of the rules of Ichimoku is you don't want to be adding a position here when price is inside the Ichimoku cloud. And generally not when it's under the 200-day either. Okay? I'd stay out of that one for now. Gap. This was Stephanie Link's final trade today. It gapped down 20.18%. Yikes. I don't know if she held this, was already holding this position. I don't remember. I didn't really pay too much attention. But basically, it closed under the 200-day today. That's never good. Here's the weekly chart breaking through the Ichimoku cloud. That's also bearish and under the moving averages on high volume. This can lead to a big drop. Okay, the momentum is behind the selling, not the buying. All right, when that happens, expect potential drop. And once that happens, here's a big drop right here. You see that big red candle? What did that lead to? It didn't lead to buying. Go back in time a little bit. Right here, back in 2021, was it? Yeah, in December 10th or that November 26th of 2021, we had that big weekly drop right through the cloud. What did that lead to? It led to a continued decline of about 55.05% in 7.6 months. So, I'm sorry, but technicals do matter. And in this case, they're not looking good. Why not find a stock that has positive fundamentals and is also breaking out and showing some strength, right? Just kind of makes sense to me. Look at the 2-hour time frame. It's had its run, okay? And now it's in bearish territory. JP Morgan. All right, let's look at the weekly chart here. This is a stock that I've held in the past. I had a small profit right there. And then I added this one on May 13th. I shared that with members there on that candle right there. It hasn't really moved up much. It's only up 1.06% since that point, but I'm still holding that position. And this is the kind of stuff that I share with all the stocks that I have in the portfolio with members, and why I added and why I closed out of positions and whatnot. All right, let's go to the next one. I'm not going to go into that here. Microsoft, okay, on the daily chart, strong still, right? Very strong uptrend. Stalling a little bit, but it's remaining above that 455.16 level, up 0.37%. I don't like the fact that it's kind of stalling for so long up in these levels, and some of the momentum is coming out of Microsoft right now. You can see that here. The ADX9 is dropping. That's a little concerning, but as long as it holds up above that Tenkan in the 456.16, I'm pretty bullish on Microsoft. Nvidia dropped under the Tenkan today, down 2.92%, and it's had a nice little run here. I don't know if this is going to be a more sustained drop. I don't think so. I think this is probably going to find some support at that trend line there. That trend line is a weekly level. You can see that low there, the low there, touched there and bounced. So it bounced once, twice, and then once it dropped under, it remained under until it got above. Now it's finding support at that trend line. So on the weekly chart, though, I don't like this candle. It's a shooting star. These are reversal candles, so I'd be cautious a little bit. I wouldn't be jumping in here based on this candle and where it is right now. I'd wait for a little bounce. Google is holding up right above the 200. What's interesting about this one, this is a bullish candle. This is a hammer. And, when you see one of those happening, like it's a single candle pattern. Let me just zoom in. After a drop, a long wick, and small body, it can lead to a move up many times, and so we'll see if that happens. All right, I'm curious to see what happens next week. Here's a weekly chart. It's for the first week, it actually closed above the cloud, but stalling at that Kijun-sen still. So, there's still some weakness right now. What about Tesla? Now Tesla, on the other hand, I don't like Tesla right now. Obviously, the news about Elon Musk, guys, check this out. It's just a lot of negative stuff about this, some drug issues that the guy apparently has with ketamine. It looks like, and these are all multiple, Time Magazine, you get The Guardian, You've got Forbes magazine. Musk reportedly used ketamine, ecstasy, and traveled with pills as he became close to Trump. New York Post. Elon Musk ducks question on drug use while stumping for Trump in 2024. Just a lot of some funny pictures there. Wow, there's a lot, man. Bloomberg here, campaign trail generally concern reports. Even on Bloomberg, they're talking about it. The New York Times, Vanity Fair. So he's got an issue with drugs. Not good. You know, the guy was. I had a lot of respect for him years ago when he started Tesla. He turned that company into something really spectacular. You know, and he's kind of dropped the ball, and just getting involved in politics sometimes will do that. You know, you'll get yourself into some hot water, and now, you know, cars aren't being bought in Europe. There's boycotts against them, both here in the United States and Canada, and pretty much worldwide, right? So that's not going to be good for the company. And what we're seeing here on a weekly chart is a gravestone doji. Okay, this candle, that's a negative candle. Remember, these last 3 weeks now, it's been staying under the Kijinsen, the 26 period, that red line right there. And so this, okay, let me show you that one too real quick. If we go into the bearish single candle patterns, it's right here, gravestone doji, long wick and flat body. So it kind of looks like a gravestone, right? And so that is bearish, folks. And here's the daily chart. You can see it turning over. Okay, not good. Amazon, I would be taking profits right there. If you're in Tesla and you've made some money, that's not a bad place to take some profits, especially after that news. All those news reports just came out. All those articles just a few hours ago. Amazon on the weekly chart is looking. Let me just throw off those lines for a moment. The cloud is bearish. Chico span is not above the candle. Tenkan-sen is under the Kijinsen. That's bearish, but price is above these sections here. On the daily chart, it looks a little more bullish, right? Price is holding up above that inclining 200-day moving average. So if it can continue, that's positive. I think that there's some potential here. Here's a 2-hour time frame. It's kind of stuck inside the cloud right here. All right, and then Apple on the weekly chart is under the cloud. We do have a bullish harami, which is a pattern, that double candle pattern that might materialize into something, but I wouldn't be jumping in here, not while price is still under the cloud. And on the daily chart, it's inside, so I'd stay out of that one. And how about Meta? Meta looks good on the daily. It's above on the weekly, also above the moving averages in the cloud, but we've got a slightly bearish cloud, and the faster moving average is under the slow. So not perfect on the weekly, but it takes time for the weekly chart to materialize into a more bullish pattern, right? You're going to see it much faster on a daily time frame. If you're looking to jump in earlier, you use the daily and maybe use the 2-hour time frame to help with entry. All right, let's look at the sectors here. We're not going to look at all of them. We're going to look at some of these, like GDX, for example, is still looking strong, right, on the weekly chart and on the daily. Here's financials on the daily chart and on the weekly. Industrials on the weekly and daily, not bad. XLP on the daily chart looks good. On the weekly chart, pretty good, not perfect. Bitcoin on the weekly chart, still up in these. We do have a reversal candle. We have a bearish harami right there on the weekly for Bitcoin. On the daily chart, it has pulled back a little bit, but we've got support right there. It's not that far. It's only 1.7% away. If it breaks through the Kijinsen, I'd be a little more concerned. That can lead to bigger losses potentially. You know, as long as it holds up, that's good. Utilities on the daily chart is looking good. On the weekly, let's see. The Chico span hasn't popped above the cloud. I'm sorry, above the price yet on the weekly, but it's getting there. Some strength coming in. XLC Communication Services on the weekly chart, and here it is on the daily. Not too bad on the daily. The Bitcoin ETF, similar to the Bitcoin US dollar, pulling back a little. Gold, stuck in here in between the Tenkan-sen and Kijun-sen. Looks like the Tenkan-sen is going to cross back above the Kijun-sen. Like I said, I think that we've got a very bullish, a bull flag pattern that's forming here. If we look at this, let me pop up the right there. Okay, so I think that there's some potential here for a move up. You can see what that flag looks like right there. Okay, if it breaks through that trend line, expect a continuation for gold. Any more? And then let's look at the members' requests. Here's some financial stocks like Bank of America, for example. Weekly chart. It looks like it. Is that a daily trend line? It is. Yeah, it is. It's a daily trend line that I drew. Let's get rid of these. These don't really apply. Okay. So let's look at this on a weekly chart. We've got a bearish cloud, but price is above. So it's not a strong uptrend. That's all that means essentially. And on the daily chart, it is a strong uptrend, right? So the faster time frame, the daily, is looking good. It's still holding up, but it was down 0.25%. Citigroup looks very similar. Here's the daily. This was Jim Lebenthal's final trade back on April 17th. Let's see how he did. He added the position back here. All right. And it moved up about 18.69% for Jimmy. Farmer Jim, as they call him. Sometimes he has a few winners. That's good. That's good. Here's the weekly chart. Bearish cloud, similar to the Bank of America. And let's look at Wells Fargo. Also, here we got a bullish cloud in the weekly, but Tenkan-sen is under Kijun-sen. And on the daily, it's looking more bullish. I like the daily chart. What about Intel? Intel, how's it been doing? It's not a financial stock. It's a semiconductor stock, but it's been look at this monthly chart, folks, for Intel. Well, someone asked, is this like reasonably priced? I mean, you could argue that from a fundamental perspective, with a price to sales ratio of 1.86, price to earnings growth 1.11, that yes, that's cheap. But there's a reason why this stock is cheap. Look at these profit margins. Negative 36.19%. Their sales growth is down 8.39%. I don't know. I don't like what I'm seeing with Intel these days. And if you look at the drop that it's had from these all-time highs up here at around 69.29, it's about 71.79%. This is why you don't buy stocks when price is under. Now, this is a monthly chart, mind you, but you can see it applies on any time frame. Here's a monthly, here's a weekly. I mean, look at that declining on the weekly chart. Look at that declining 200-day, right? So here's a little trick for you guys, or something that you might find interesting. If you see the 200-day moving average is actually declining, okay, like it is here, and you can see it's in a downtrend, and price gets above it and closes, don't trust that. Trust the trend line, all right? The moving average. Wait for this thing to start turning back up, and it doesn't look like it's coming in to do that anytime soon. Here's a daily chart. Now the daily chart, look at that 200-day. Oof. Yeah, even on the daily chart, I mean, it's just a mess, this stock. I just wouldn't touch this with a 10-foot pole. And you can see that the directional movement index is very negative here on the daily. You can see the ADX is popping up here. Volume is increasing. Negative DI is above the positive DI. That's all negative right here for the directional movement index indicator. I've got it at a setting of 9, which is different than the traditional setting. And I wouldn't recommend Intel. And if we look, one more thing I'll show you guys. If we go to FinViz and I type in INTC and we look at it, I mean, let me zoom in on some of these numbers here so you can see them. I mean, sales quarter to quarter, down 0.45%. You can see There's the negative profit margins. The operating margins are negative. Return on investment is negative 13. Return on equity is negative 18.66. Return on assets is negative 9.97. Performance year to date is down 2.49, but for the year it's down 37.06. Sales here, you can see them on the histogram declining, while shares outstanding are increasing, and that's not good. That means that they're issuing more shares, diluting the price of the stock. And if we go further down, we can look a little bit more down here. We can see the net margins. There's a histogram that shows you the net margin is negative. Operating margin is also negative, right there for 2025 so far, right? Not good. And if we look at the free cash flow, let's look at that for this company. Go to here. It's all negative. So I'd stay out of Intel. All right. And that's the beauty of technical analysis, because, you know, sometimes you don't know what to buy. I mean, just looking at a chart, you can quickly assess the strength of a stock sometimes just from looking at the chart. At least you can assess the, well, not necessarily the fundamentals, but you can certainly assess the demand for the stock. How much, you know, do people want to own this stock? And the answer with Intel is no. Okay, there's got to be a catalyst or a news event, something. Maybe a new CEO, right? Maybe it's a new product that they come out with that's, you know, going to be very competitive. I don't know. It's got to be something, but we don't have anything there with Intel, and it's been kind of a losing stock for a long time. Guys, that's going to do it for this video. Remember, if you want to help support the channel, come back here, hit that subscribe button, like button, hit the notification bell, share this video with someone that you know, and consider joining. And click on the 9 more links here. If you want to access the $25 coupon for the TC2000 software, you click on that link right there, add your email, download the software. Here's the pricing information for the software that I'm using for trading. So you can see it's with that $25 discount, you only pay $5 for a month, okay, for the gold. All right, that's it. Have a good one. Have a great weekend. I'll catch you in the next video. And look out for that members-only video tomorrow. Thank you.